For more on Tesla, let's bring in Loup Ventures founder and fast money friend Gene Munster. Gene, great to have you with us. I am surrounded by bears on this stock. You like this release. Tell me what this sort of resolved in terms of the bear case against the stock.
I want to take a step back and talk about that demand topic. And the 400,000 number has been thrown out there. That really solidified investors' view that the Model 3 is off to a fast start. And then we move forward to the December quarter when the Model 3 peaked and then it dipped down in the March quarter. That really set this expectation that the company was going to continue to decline. And this was simply a pent-up demand, unprecedented demand for a new product. And this reversal, and I would also point out that even though they slightly beat some of the expectation, the whisper numbers were much lower than what they actually reported. So this was entrenched, I think, in street thinking, is that it's hard to pick what the underlying demand is. And I would point to two numbers. In the March quarter, they did 63,000, in the December quarter, they peaked Model 3 at 63,000 deliveries. They did 77,000. It went down in March, and then now it's gone up to 77,000. There was more headwinds than tailwinds in the June quarter. We can go through them. I'll set them off to the side here. But if you take that, maybe the base case, that there was equal head and tailwinds for the June quarter, and they stepped up from the peak Model 3 quarter, and they have greater demand. I think it, or at least the backlog is greater that they entered. I think the case is powerful, that there is something bigger going on here. Electric cars are undoubtedly the future. And so I see this as a powerful step forward. The company is far from perfect. Some of the things that Tim talked about management deliveries, as someone who supports the story, I'm most concerned about, management departures. I'm most concerned about that. But that said, I think it's focusing on too much of the details. The big picture is pretty simple, is that this current demand is not about pent-up demand for Model 3.
Are you concerned at all that in order to achieve these levels of sales for the Model 3 specifically, that margins were compressed in the quarter?
I'm not as concerned. I think that's more or less a wash. Given they have recently raised money, our math suggests that as long as they do 80,000 or greater vehicles per quarter at call it a 10% margin, which is a little bit below their expectations, they should have money to the end of 2021. Now, that's not a perfect world. That's one of the problems with the Tesla story. But I am not as concerned about the cash piece as I was 3 months ago before they did this, call it $2.5 billion raise.
Hey, Gene, it's Tim. Aren't you concerned that they haven't reaffirmed 2019 guidance here? I mean, these were great numbers. Wouldn't they have come in and once again, because in the first quarter they reaffirmed 2019 guidance, you'd think that this would be a great time to say, by the way, 360 to 400 looks really, really good. Or have they pulled forward a lot more demand? And is it is it not something that we can expect?
I would be concerned if not for them talking about the backlog grew in the quarter, which tends to be a leading indicator of where guidance is. And so that was noteworthy. That did stick out. It was a point of concern. But again, I think it's less of a concern when you think about what's happened with the backlog.
Gene, does it concern you, though, also, when you think about just deliveries here? Actually, I got to give up. I'm sorry. When do you guys take this?
Well, I'll tell you, Gene, here's one more question.
Sorry about that.
You talked about details. I mean, you have key executive leaving the company who seemingly knew about these great results also. This is not a concern. You're talking about the big picture, but the big picture is that the most talented people at this company outside of the CEO have largely left this firm at a time when there's a lot of pressure and there's a lot of questions about corporate governance.
So there's no easy way to I mean, this is negative. I want to be clear about that. It's negative what's happened. I would also point these departures have happened, and this is part of the negativity for the last year and a half. But here we are at the end of the June quarter with still some impressive results. And you cannot sustain a company with the kind of departures that they've had. But I think that the company has enough trajectory right now, at least over their, with the current lineup, their current team, to get them to a point where you don't have to worry about solvency. And at that point, I suspect that the retention should improve. Some of this intense pressure environment that they have, which ultimately forces some people out of the company, I think should subside. So I'm looking at this as something that is part of a symptom of a company that was in a lot of pain. And I think that as that starts to ease, they should have better retention. Are
you surprised or concerned that the stock is up 7.6% when 35% of the shares outstanding are short. I mean, there should be a massive squeeze if this number was really that bullish. Now, I mean, Carter made this point earlier. I think that's right. 7.6% for a name like Tesla seems like nothing.
Agree. It's like nothing. The bull bear case is far from over. I think that our conversation is evidence of that. And I am not surprised by it. And I think that this will continue. I think investors are going to want to see several quarters of that before this ultimately gets back to some form of stability. So not surprised in the questions. Let's say they have a good September quarter. Let's fast forward to a decent September quarter. The question will be, what about December? And unfortunately, it's just at some point, some level, it's a show me story. One other thing, Melissa, on that is I've covered stocks for a long time, never seen a story that is so emotionally charged on both sides. And since it's so charged, we're going to have this bull bear debate for a long time.
All right, Gene, thank you. Always great to get your analysis. Gene Munster of Loup Ventures. So this is a stock that had a massive June, right, but still down 30% or so year to date. The question for every investor is, you put money in this stock, it takes away your ability from allocating that money to another investment, which may yield you a greater return. So would you put it in Tesla or something else? I'm not going to.
Don't ask me. Don't ask me.
Obvious.
Well, he just saved me before, so I'm going to come back in here.
Right.
My mind just went blank. I'm sorry about that. But here's the deal. Carter had the call. When the thing got massively oversold, when it broke the levels where it's trading right now in the aftermarket in 245, earlier this year, it went down 25% in a straight line. It got really oversold. We know how much the analyst community hates this stock. There's 17 sells in the stock, 31% short interest. You have to buy this thing when it's down in the hole.
Can I say one quick thing? We have a case where now I think Elon, much like our president does this masterfully, has changed the conversation from cash flow and solvency to deliveries. And this is not what we should be talking about.